I used to be a special situations analyst at two multi-billion-dollar hedge funds, and I'm going to welcome you now to the latest in my series of investing tips videos. And a bit of a change today, because up until now I've only posted these on YouTube, and we're now going to be posting them on some other channels. But don't forget that if you sign up on our website, behindthebalancesheet.com, you'll get access to these videos, all sorts of free training materials, plus free newsletter. And my real purpose in doing this is to try and persuade you to buy one of my investing courses for private investors. When I was at the hedge funds, we used to try and make 50-60% in 18 to 24 months. Quite challenging, and especially because we tried to do this with taking very little downside risk. So we're looking for asymmetric risk reward opportunities. And we were quite successful at doing that. Now, I can't promise you that you're going to beat the market by 10 or 15% per annum. Of course I can't promise that. I don't know you. I don't have any idea how good an investor you are. And all these people that promise you riches tomorrow, guess what? They're not telling the whole truth. What I can promise you is that our investing courses will really help you improve your investing skills. And if you don't believe me, watch this video and see for yourself if you think that we're talking common sense, if we can help you improve your skills. So let's get on with it. This is number 13 in the series. The previous ones are on YouTube. And this is the 6th of our mini-series on moats. And Warren Buffett came up with this idea of an economic moat, and it's a way of identifying a high quality company subjectively, as opposed to using return data or some other quantitative metric that measures quality. And he defined an economic moat as being a structural impediment which obstructs competitors from entering a company's markets and reducing those all-important returns in capital. And the effect being a sustainable high ROIC, which is the holy grail of quality investing. And until now, we've covered economies of scale, not really a moat. We've covered network effects. We've talked a bit about intellectual property and brands. We've talked about customer loyalty, customer captivity. And now I'm going to cover another form of captivity, high search or high switching costs. Let me explain more. High search costs. What are these? Well, if you've ever looked for professional services, especially if you're looking in an emergency, you might not know whether somebody who's advertising their services is as good as they say. And this guy is Charlie Mullins, and he has just sold his company, Pimlico Plumbers, for a 3-figure millions of pounds, over 100 million pounds, to a private equity backed US professional services company. And Charlie Mullins has become an incredibly successful guy because he's guaranteed with Pimlico Plumbers that when you call up a plumber, that they'll be there and they'll fix it. And he's the most expensive plumbing company in London, I think, but he has done phenomenally well because of this issue of high search costs. I should just say for our American viewers or those outside the UK, Charlie collects Bentleys and he collects number plates. In the US, you can order a license plate and you can have whatever you want on it. In the UK, you've got to pay. And these license plates, BOG1 and B1DET B-Day, are phenomenally expensive. He must have well over £100,000 worth of license plates. But high search costs associated with professional service providers. I mean, how do you know if a lawyer or an accountant's any good? Obviously, if you go to the big brand name firms, the big 4 accountants, or the Magic Circle law firms in the UK, the White Shoe law firms in the US, you know you're going to get a good service, but they're incredibly, incredibly expensive. And often, even if you're dissatisfied, people think it's just better to stick with what you have and what you know rather than step off into the unknown. Now, this isn't an area that's very big in public markets. There are corners of the stock market in which high search costs do prevail. One example being in the UK, the law sector, because we've got a lot more quoted lawyers, and it's a growing sector as more of the legal firms come to the stock market. But it's not huge. More common is high switching costs, and it's very similar. There's a lethargy associated with a move. Often it can involve extra cost of training or just getting used to a new system. Very often this happens with software providers. There may be a cheaper alternative, but is it worth the hassle? Often a service is really important to your business, but it's not that expensive. You think, well, why bother? A good example in my case is Dropbox. So I could just switch to the Microsoft storage service. I pay for it already. Or Google Drive, I pay for that already. But I'm in Dropbox and copying over all the files. The FAG is $100 a year, but I've got lots of links, and it would just be a fag to change. So I'm kind of locked into Dropbox as long as the price doesn't go extremely high. And that makes for a very high quality business. Another example, email providers. I mean, I did switch my email provider. I was on MailChimp and I switched to ConvertKit because I wanted some particular tools in ConvertKit which weren't available in MailChimp. But it was a bit of a fag. It was a bit of a hassle. And, you know, if you can save a bit of money by switching, but you think, why bother? That's usually the sign of a good business. And that's usually a sign of a business with a bit of a moat. Usually a sign of a higher quality business. And that's what I look for. The example that's usually cited with this is Microsoft, and particularly the Office product. And here you've got a funny situation because Google came out with the same product effectively. Google Sheets is as good as Excel. I mean, some people would say it's better. And it has the magic attraction of being free. Yet Microsoft Excel is still the most popular business tool. Why is that? It's this lethargy, this frictional cost of moving, which marks a very high quality provider and a very high quality business. So that is all I want to say about this sixth facet of a moat, high switching or high search costs. I hope you've enjoyed this. I hope you found this series valuable. And don't forget, you can sign up on the website, get the newsletter, sign up on YouTube, subscribe so you don't miss a single video. And most important, check out our courses, because if you're interested in investing, we can really help you improve your skills. Thank you.